Hey guys, welcome along to our technical analysis of a few pairs for you guys to have a look at to see the reason why we've entered one of the trades and a potential setup for later on in the week and the reasons why you would enter. So we'll go right ahead and look at the charts. The first one we would like to look at is GBP AUD. We will start off on the daily chart because that is just the best way to start, and then you zoom in and go in towards 4 hour, 2 hour and 1 hour if that's what you want to do. As always, we've got the purple lines on, which are either support or resistance levels. This is our chart that's been set up for a good few months. It's a pair that we trade quite often, hence why all the indicators are already on there. So currently where we are is around 1.76956, and we have this area here which we'll highlight to show you guys. It's basically an area of rejection. It's been rejected quite a few times. As you can see, the wicks are rejected in this area every single time, so there is quite a lot of built up area, and it often indicates quite a heavy change in direction, and we have seen that. This big red candle here indicates a change in the market and rejection of that area once more. And what we then created is, I'll move that over a touch, green circle here is where we place the fib. I've just got an alert as it's crossing a bit lower. That's dropping quite dramatically, GBP AUD. Our clients will be benefiting from that. This is a live video, of course, on Tuesday. So we're drawing the fib from here, the top green circle, green ellipse, to the bottom, and the price bounced back up into our favoured region, which is right here, the yellow box. As our millionaire clients and discussion group clients know, we like to trade from the 0.5 to the 61.8, and that's why we highlighted that region. And on the daily chart, you couldn't get much more of an obvious rejection from that zone. So you go from A down to B with the fib. It rejected our favourite area, and we also have this trend line, which will be a little bit more clear when we go into the 4 hour chart. Trend line, got 1 rejection, 2, 3, 4, 5, 6, 7, and we entered the trade roughly there, which is 1.7715, and it's been dropping dramatically ever since. So what we would expect to see, again, A down to B, 2 green circles, back up, retraced into C, and then what we'd like to see is a new lower low past this area, which would then be our D mark. Obviously, it's not an exact science where this new low low would be, but if we have a look at our chart, I will place a live support line on there. As you can see, this area here has been rejected, and it acts as support and resistance quite a few times, still on the 4 hour chart. So I wouldn't be surprised if the new lower low was to come down into this area here. That is why we entered this trade. It doesn't really, there's no such thing as a perfect trade. The confluences to enter are pretty much all there that we would generally look for. Big rejections of a certain area on the daily, which is here. We have a very strong trend line, which has been respected each time. And our Fibonacci played out literally perfect. We haven't created a new low low yet. And obviously there's no particular set time frame when that will happen, because it doesn't really work like that in Forex. But I would aim for, personally, 1.75447, somewhere around that area. That will be our next or long-ish term take profit level, somewhere around there. Again, we don't want to get too far into this in the future, but once we've created this low low, we would expect a pullback, but we will update our clients on that movement if and when it does happen. So that is the reason why, guys, we entered that trade. I hope that's pretty simple to see on the charts. Just a very quick one also while we're here. We have another purple line, as you can see, acting as a bit of resistance. It's currently trying to break through that area. That support region isn't too strong. It's been rejected a few times, but not too many. So we don't see that being much of a problem. And then after that, it should just be plain sailing all the way down. That is the reason why we entered that particular trade. And the next one we're going to look at is a potential setup for either tomorrow or the rest of the week. It is Euro USD. We will zoom out just a touch to the daily. So it is always better for us personally to start on the daily chart, but it is up to you. We've got this trend line on here, just tidied up a little bit. And as you can see, Euro USD has been in a bit of a decline for quite a long time. That's a very big downward trend. It's just kind of been moving sideways ever since. But our first little indication of a change would once again be an area where the candles or the wicks have been rejecting. And this is that area here. 1, 2, 3, 4, 5, 6, 7, 8, maybe even 9 rejections of that area. Moving along just a touch. It didn't quite get there. So we would think around this region for a possible change in direction. So what do you then look for? We look for a trend line, which has been touched 1, 2, 3, almost 4, 5, 6, 7, and again almost 8 there. And it has been rejected and respected each time, and it is currently moving back to the upside ever so slightly. So we'll move into the 4-hour chart, which is one of our favourites to analyse. Again, the trend line can be touched up a little bit depending on the hourly chart that you're looking at. Again, you can move it in just a touch, so it touches a few more of the wicks. As you can see there, it's touched a few more times, and just recently, even today, it has touched that area and rejected. So we would have a look to see if we can get another trend line on from the opposite direction on the 4-hour. This will come with practice, guys, if you haven't placed too many trend lines yourself. Again, we're placing these on live. That one, potentially, it's not the cleanest trend line, so we'll take that off. It's not the greatest, to be honest. And we will try and get a one that just looks a little bit cleaner. Obviously, you want a trend line to touch as many wicks as you can. It should touch at least 3 times for it to be a valid trend line. And from the higher point of the wick possible to start it from. I'm going to go from there. I think that's pretty good, pretty accurate. I'll zoom in just a touch. So we've got 1 touch, obviously where it started, 2, 3, 4, 5. Again, it's been touching, respecting, rejecting. But the momentum from this area here, which we would call a double bottom on the 4-hour chart, and a bit of rejection. This would be our first indication on the lower time frame, again, of a change in direction. We tried once again to break our trend line, and it got rejected, and it's currently coming back down. If you wanted to look at this a little bit closer, this here is a new higher high. We're going to start from here, the double bottom. That will be our first indication. Higher high, higher low. So what we would do is then put the Fibonacci tool on from the bottom to the top, and we'll zoom in so you can see the prices. This wick here. This wick here that has rejected, as you can see, the 0.5, in between 0.5 and 61.8, our favourite area to enter a trade. It's rejected that area very, very strong, and it is currently pushing to the upside. Entry for this trade, for a buy, honestly, we would enter the 2-hour chart. These are our moving averages. When the blue is over the red, that currently indicates that the market is moving up. So we would look for these moving averages to cross over again to the upside. As you can see there, it's currently red over blue. We want the other way around. And this very small area of resistance, this is the 2-hour chart, guys, remember. This very small area, we would like to see a break of that towards 1.7200. I would probably think about entering there, to be honest. The momentum is in my opinion, strong enough to break this trend line. But if not, what we can do is have a look at the risk to reward ratio. So say we entered there a little bit higher. You want the stop loss to be, if this retraces back down, our moving averages are there, so we'd want the stop loss to be a little bit below the moving averages to give you a bit of buffer room, just in case news or a tweet or anything by Mr. Trump scares the market and we have a big whip to the downside. We would have the stop loss around there, 1.16711. And honestly, we could see this going very, very high towards this area here, which is 1.18393, as you can see here on the side. So tie that up just a touch, because we would be looking to take out these highs or even match them at the very least. So if you're familiar with TradingView, you'll know what the charts tell you and what these tools you can use, how you use them to your benefit. The risk to reward ratio is here, as you can see in the red writing, 2.53. That is a very, very good risk to reward. You want anything more than 1.0. Ideally, the higher risk to reward ratio, the better. So that's your stop loss. Your entry point isn't quite there yet. If it rejects this area once again and pushes back to the downside, then we will just leave it for now and reanalyze. A possible move would be a rejection of that area back down to this trend line that has been respected, then a big push up, and we would either break that area. I mean, it's pretty easy to follow the trend line patterns and the direction in which you can predict the market's going to go. Obviously, nothing ever works out perfectly, but these arrows indicate the direction that the market probably will go. The trend line's being respected each time, but all we need to see is a bit of momentum to the upside, which could come from the news announcements, which are due to be released on Thursday. Until then, I wouldn't expect a huge deal of movement, but if we do, I'm going to set an alarm or an alert when we get up to 1.17200, around that area, and just see how the market reacts. The risk to reward is more than good enough, so we'll be more than happy to take the risk. 2.53 is a very, very good risk to reward. You can see this moving over 118 pips to the upside is our current prediction. So that is our analysis for Euro USD, guys. This is a live analysis. What time is it now? It's currently 4:15 in Europe, 3:15 in the UK. Obviously, change your own time depending where you are in the world. But if you want any more information on this, either drop a comment underneath the video and someone will get back to you. Or again, most of our clients already know our contact number, the WhatsApp, the email, anything like that. And if this does turn into a signal, which we fully expect it to, you will receive the information via WhatsApp when we expect you guys to enter. So that will pretty much do us for now, guys. It's just a bit of a look into how we analyze the charts, why we enter certain trades, and the potential in which certain trades are going to go directionally wise. As we can see here, having a quick look back, GBP AUD, it's melting once again, making very, very big moves past our small support area. So keep an eye on this, guys. This could go very, very low. Have a look back over the video if you're not sure of any of the areas you're going to be aiming for. And that will do us just for now, guys. Any other questions, feel free to ask. And we will be doing another session like this at least once a week, depending on your guys' feedback. So please drop a comment below the video if you have any suggestions or pairs that you would like us to analyze next time. Thanks very much, guys. Speak soon.